Right. Assalamualaikum warahmatullahi wabarakatuh. Hello, everybody. Hello, sir. So, today I will explain about my paper. It's about the history of economic development in the country of Ireland. Well, for the abstract, Ireland is being the top 5 country with the strong economic foundation in this day, according to the 2022 Index of Economic Freedom under the Switzerland and above the New Zealand. This thing was inseparable with the struggle of the country to boost the economic revival in the past, considering that Ireland has a very difficult journey on economy, especially in the age when they just had freedom from the Great Britain. Ireland has a lot of economic crises that they faced in 1987, in 2008, in 2010, in 2012, and etc. Chapter 1 Introduction. Since the beginning of 2008, under the Britain Cowen government from the Fianna Fáil party, it is not only the island that had the crisis of economy, but also other European countries such as Portugal, Spain, and even Italy follows after that. This country, which is part of the European Union, was not only in 2008 when it experienced a financial crisis, but in its history it had several times been involved in economic problems. The reason why this country is having the financial crisis is in 2008 especially is there have been various types of economic and financial disturbance over time, arising from the development of economic markets and new economic markets in the last century period, namely the currency crisis, financial crisis, national debt crisis, the stock market crash, and the failure of public financial management in the long term. Ireland experienced the financial emergency as a domino impact of the financial emergency that happened within the European locale while began from Greece. At that point, spread to Ireland, Portugal, Italy, and Spain. The joining of Ireland with the European Union confronted Ireland with a number of challenges, one of which was a critical distinction when it joined on January 1, 1973. Ireland was an agrarian nation, whereas most of the nations within the European Union were mechanical nations. The financial emergency that happened in Europe itself was actually the effect of the awful credit emergency within the joined together states. Since nearly all nations that follow to a free showcase framework are tied to each other and the stream of reserve is free in and out of one nation to another, with money-related directions circulating for each nation. Nowadays, the Ireland government has a goal that is to develop a professional economic evaluation, since that will provide high standards of economic and policy analysis to assist the government decision-making process, to ensure application of established best practice in policy evaluation in support of better value for money and more effective policy program intervention by state authorities, and also to facilitate more open policy dialogue with academia, external specialists, and stakeholders across the board socio-economic spectrum. Chapter 2, the contents. Let's first is the history of accounting developments. The early development of accounting dates back to ancient Mesopotamia, and it's closely related to developments in writing, counting, and money and early auditing system by the ancient Egyptians and Babylonians. It based on the Robinson's book that published in 1992. The first professional organizations for accountants were established in Scotland in 1854, starting with the Edinburgh Society of Accountants and the Glasgow the Glasgow Institute of Accounting and Actuaries, the organization where each grant a royal character, the Royal Charter. Members of such organization could call themselves chartered accountants. Then the history of the country of Ireland. Ireland, lying to the west of Britain, has always been to some extent cut off by it from direct contact with other European countries, especially those from Sweden to Rhine River. Readier access has been through France, Spain and Portugal and even Norway and Iceland. Internally, the four ecclesial provinces into which Ireland was divided in the 12th century realistically denote the main natural division of the country. Of these, the north had in the earliest times been culturally connected with Scotland, the east with Roman Britain and Wales, the south with Wales and France, and the southwest and west with France and Spain. In later times, despite political changes, this association continued in greater or lesser degree. The 17th century was a tough century in Ireland. It culminated in the imposition of the harsh regime of penal laws. This law sets about disempowering Catholics, denying them, for example, the right to take leases or own land above a certain value, outlawing Catholic clergy, forbidding higher education and entry to the profession, and imposing oaths of conformity to the state church. The Church of Ireland. During the 18th century, strict enforcement and enforcement of the penal laws is but by 1778 Catholic held only about 5% of the land in Ireland. In 1782, a parliamentary faction led by Henry Grattan, which is a Protestant, successfully agitated for a more favorable trading relationship with England and for greater legislative independence for the Parliament of Ireland. However, London still controlled much of what occurred in Ireland. Inspired by the French Revolution, in 1791 an organization called the United Irishmen was formed with the ideal of bringing Irish people of all religions together to reform and reduce Britain's power in Ireland. Its leader was a young Dublin Protestant called Theobald Wolfe-Tone. The United Irishmen were the inspiration for the armed rebellion of 1798. Despite attempts at help from the French, the rebellion failed and in 1801 the Act of Union was passed, uniting Ireland politically with Britain. The economic reforms in the 1980s, along with membership of the European Community, for now is the European Union, create one of the world's highest economic growth rates. Ireland in 1990s, so long considered a country of emigration, became a country of immigration. This period in Irish history was called the Celtic Tiger. Well, the next is about the economic condition in Ireland. The economic conditions of Ireland. The Republic of Ireland is one of the richest countries in the world. The economy of Ireland can be described as a knowledge economy or application of knowledge to generate tangible and intangible value, which mainly focus on financial service, high tech, and life science. In terms of global GDP per capita ranking, Ireland is fifth of 187 on IMF and the sixth of 175 based on World Bank. Ireland has a sustained period of continuous economic growth from 1984 to 2007, but this growth was slowed by the financial crisis of 2008. The primary industries of Ireland rely on its rich natural resources and include agriculture, mining, forestry, and fishing. These industries account for 5% of the country's GDP and employ about 8% of the total labor force. Ireland has a great potential for agriculture considering its large fertile pasture, particularly in the southern and midland regions. The agriculture contributes only 1% of GDP. The agri-sector accounts for about 7% of the gross added value, 9% of the national employment, and 10% of merchandise export in 2016. Well, you can see the explanation here. With a 9% forest cover, Ireland is one of the last forest countries in Europe. It mainly relies on wood import as it tries to increase the forest cover. Then the extraction of natural gas takes place on Corrib and Kinsale gas field, where there were approximately 20 billion cubic meters of proven reserve. Well, nowadays, the gross domestic product or GDP in Ireland was worth to 425.89 billion US dollar in 2020, according to official data from the World Bank. The GDP value of Ireland represents 0.38% of the world economy. The third is the history of accounting development in Ireland. The history of accounting development in Ireland is very rapidly growing, as the author have experienced, as I have experienced explained above about the economic condition of Ireland. So the accounting development in this country is the same as quick as the economic condition of it. The profession of accounting is regulated in Ireland by the Irish Auditing and Accounting Supervisory Authority, or IAASA. The IAASA register includes the four main accountancy bodies in Ireland. They are Institute of Chartered Accountants in Ireland, Chartered Institute of Management Accountants, Association of Chartered Certified Accountants, and the Chartered Institute of Public Finance and Accountancy, or CIPFA. Well, when the Institute of Chartered Accountants in Ireland obtained its charter in 18, its membership was a mere 42, and its early growth can hardly have been assisted by tendency on the part of some prominent Irish business firms to engage London auditors. In 1913, the Institute's membership had only reached 116. Its rapid growth since the First World War has, however, been in contrast with the slow progress of its first 25 years. The membership of the Institute of the order of 200 in 1920s had multiplied to 1,315 in 1957. Well, now the fourth is the application of accounting in Ireland, or the current application in Ireland. Well, in 2002, the European Union agreed on an accounting rule which required all European Union's companies listed on an official market to comply with IFRS in their joint brand financial statements, starting in 2005. Member countries were exempt from extending this requirement to all companies, not just listed companies, including the financial statements of other companies. As a country that is part of the European Union, of course, Ireland must follow the rules that have been made and agreed by the European Union. According accounting in Ireland developed as a single discipline. Then the company law added another set of requirements. Since the 1970s, an important source of development of corporate law has been the European Union directives, where accounting standard and standard setting have become more authoritative. Then it's about the regulation and implementation of accounting in Ireland. The two main sources for financial accounting standards in Ireland are accounting profession and the corporate laws that govern the activities of individual companies. In the 1981 law stipulates five basic accounting principles, which are revenues and expense are adjusted on an accrual basis. Individual assets and liabilities in each class of assets and liabilities are calculated separately. The principle of conservatism is applied especially in the recognition of income earned and all liabilities and loss found. The application of consistent accounting policies is required from year to year. And last is the ongoing company principle can be applied to the entity being counted. Well, this is, you can see the explanation of the regulation and implementation of accounting. Until 2000, audit standards were the responsibility of a board of CAPS. In 2003, the Accountancy Foundation was dissolved and its functions were transferred to the FRC, which was supervised by a professional oversight board. The POB also oversees an independent audit inspection unit. Auditing practice board moved from accountancy to FRC. And finally, the Accountancy Investigation and Discipline Board was established, a mechanism to investigate and discipline accountants or accounting bodies for unprofessional behavior. Well, the next is the financial report. Ireland financial statements are the most comprehensive in the world. It's covering director's report, profit and loss account and balance sheet, the cash flow statement, the overall profit and loss report, the accounting policy report, the notes referenced in the financial statements, and also the auditor's report. The director's report mentions the main activities of the business, an overview of operation and future developments, important post-balance sheet events, recommend dividends, names of directors and shareholders, and political contribution and charitable contributions. The consolidated financial statements are